Well, back home on Dalal streets, the Sensex closed more than 600 points in the green, while the Nifty shot up 160 points in Friday's trading session. The gains were led by the banking stock, and the mid-caps too did very well. Anisha Jain joins us to get us all the market cues we need to watch out for trade today. Hi Anisha, good morning.
Hi Sonal, very good morning. Well, yes, the market is sitting at close to the record high levels, and that is because the political uncertainty was out of the way last week, and that is evidenced by India VIX as well, which is down about 40% in the last two sessions. In fact, the last of it in terms of who will be the finance minister would be out this week when Prime Minister nominee Narendra Modi takes oath and is sworn in as the Prime Minister on May 30th. Now, apart from that, the focus shifts back to the earnings as well as the global and domestic cues. In terms of the global picture, the picture looks positive more or less because the Dow ended in the green on Friday, up around 100 points, but for the week it has reported fifth consecutive week of decline. Now remember, for the US markets, what are we watching out for is the President Trump's visit to Japan and the trade rhetoric coming out of there. And Europe as well ended in the green. There we are watching out for the resignation by British Prime Minister Theresa May, as well as the early indications coming out of the European Union parliamentary results. Apart from that, Asia this morning is largely positive. The likes of Nikkei, etc. are trading in the green as we speak. But the biggest and the most important cue for the day perhaps today in terms of the domestic picture would be the draft regulations that have been announced by RBI on NBFC's liquidity risk management. Now, without going into much detail, the norms really revise the asset liability management as well as disclosures, and they propose to introduce the liquidity ratio for all deposit taking NBFCs. So that means additional regulations coming in from the NBFC world, and that might be a bit of dampener. Other than that, yes, the markets are sitting at the record high levels. On Friday we saw the Nifty touching the 12,000 mark as well as the Sensex touching the 40,000 mark, but then we saw a bit of profit booking, and that is what is expected today as well because the SGX Nifty suggests the start on the back foot. Remember, the DIIs net sold around 200 crores in the cash equity markets on Friday, though the FIIs, they pumped in money. So let's see whether we correct a tad bit before breaching new highs later in the week. Back to you.
Okay, all right, Anisha, thanks so much for giving us the entire trade setup. But what are the stocks you're looking at in today's trading session?
Oh, well, Nigel, a whole host of stocks at the fag end of the earnings season, and we have almost 300 stocks which will be reporting earnings today. But before I get swamped up that some of the other details that we have, of course, financials will be in focus on account of the draft norms that I was talking about. Separately, on Jet Airways, we understand that the ex-chairman, Mr. Naresh Goyal, as well as his wife, were stopped from traveling abroad, and we also understand that MCA as well as SFIO has a lookout circular on both of them, so that is important to track. Separately, we have the top management of 1% Beverages that was arrested in a fake invoice GST fraud, so that is also something to watch out for. The stock has been languishing for a long while, and today there is this added pressure. There are some unverified reports that we are picking up from the papers. Jagran Prakashan is looking to buy ADAG's Reliance Broadcast for around 1,200 crores, so keep an eye out on both of them. We have a lot of results today, as I was talking about. Some of the big ones include Adani Ports, GAIL, Z, BHEL, Colgate, Motherson Sumi, Indigo, etc. A lot of result reactions to deal with as well. NTPC, the revenue growth was sluggish. The profit is aided by a tax write-back. Otherwise, a dismal performance coming there. For Grasim, the margins were a bit of disappointment because the margin came in sub 17% versus our expectation of 19%. Similar story for IGL, wherein the volume growth was strong. It is just a bit of margin dampener that is coming in, at the margin being 21.5% versus poll of 22%, but the brokerages are more or less sanguine on the stock. For India Cements, the margins are also disappointed, and there has been no debt reduction. NCC and PNC beat estimates, whereas for Page and Bata we have seen a margin miss. Similar story for Coffee Day and Dish Enterprises, wherein we have seen a margin miss. Whirlpool reported sluggish revenue sales, and all of these stocks perhaps will be in the red given the fact that the margin miss has been reported in Q4.
All right, Anisha, that's a long list of stocks that we'll be watching out for today. Thanks a lot for that.